So has anybody out there noticed that things right now in life are just more, how do I say this, Thomas?
Expensive?
More expensive, that's right, more expensive. And we're not just talking about housing. Now, why is it? Well, it's pretty simple if we think about it. We have too much demand for too little supply. That's how the stuff works. It could be a house, it could be gasoline, tacos, tempers, or trinkets. It doesn't matter. When demand is higher than whatever the inventory you have for any trinket, it's going to get more expensive. Now, here's the reason I bring it up, because I find this kind of odd because everyone's talking about inflation these days. We don't have a shortage of stuff that we want to buy. In fact, at the port of Oakland, California, it's so overrun with shipping containers full of a bunch of junk that me and you want to buy that they are now charging a surplus for not getting all that junk, those containers full of stuff, off their docks. It's a true story. It turns out it used to be you could leave your shipping container there for 7 days before you were charged an additional tariff, but now they've moved that down to 4 days because they've got too much stuff. Now I ask you, how is this possible? Because this isn't what I'm hearing when I watch Savannah and Hoda in the morning on Channel 3. Hell, I think right now I'm just kind of being lied to about this stuff, which makes me wonder, what in the heck else am I not being told the truth about? Well, here's one if we're going to talk about things that are in the real estate and lending space. The newly minted and newly thought up appraisal bias. Have you heard that term before? Turns out somehow all appraisers in the country lost their mind and started giving an opinion of value based on a person's race rather than the value of the home. Now, in order for this to be true, there would have to be, I would assume, a secret meeting amongst all residential real estate appraisers, and nobody would be able to break ranks. That's how it works. They would all have to agree then on being the worst form of professional bigots and keep that secret in the halls of their secret meeting place somewhere in, I don't know, I'm gonna say Switzerland. Which sounds pretty plausible to me, right? Now, why do I say this? Well, about 12 months ago, this narrative was being pushed and published and forced on the plebeious population known as me and you. It also conveniently coincided with the industry looking to do away with appraisers. Now, I guess it might be helpful and expedient if they all went crazy at the same time, now wouldn't it? Now, this is funny if it wasn't so not funny. Appraisers went so crazy bigoted that we needed to have a panel to convene to discuss the problem with appraisers. So here's the panel. Do you notice anything? And finally, equity share. That's the next thing that's going to happen to the mortgage market. Equity share, my friends, is not a great idea. It's a downright bad idea. And what is equity share? It's when a third party puts money down on your house so you can afford the payment, and in return they take a disproportionately high amount of the equity in your house. Equity share, when it's used, is going to make all of us glorified renters. Now, why is it a bad thing? For starters, in short order, it's going to become the norm because we collectively will fall victim to the ruse. Case in point, Japan came out with a 100-year loan to make homes more affordable about 40 years ago. All that did was increase home values because we inherently will always pay as much as humanly possible for what we want to have, regardless of any personal financial peril. So here's how it works. $500,000 is unaffordable for me. So I need to spend $400,000 because that is affordable for me. But what if we found a way to make $500,000 affordable for Brian? How do we do that? We could lower rates, sure. Bigger down payment, absolutely. More favorable terms on my loan, we could do that one as well. How about this? An even bigger down payment, but the issue is I don't have the money. That's where Wall Street comes in. You need another $90,000, Brian? I'm your guy, and all I want in return is 72% of your equity. That becomes the norm, and this is on the horizon for lending in the United States right now. Now, here's the pickle. I'm going to support it. Why? Because the outcome is already determined. The game is fixed, and my personal crusade against this inevitable bad idea won't amount to a hill of beans. It's kind of like subprime loans. Was it me writing the loans, or was it my clients' out-of-control spending habits that caused the crash back in 2008? Here's a hint. I didn't cause the crash as a loan officer. Wave Runner and Kawasaki did it.
If you're really strapped for cash, sell the jet ski.
I don't tell you what to do with your money.
Now, I say this because prices on homes are already seemingly irreversibly out of whack with no rational solutions in the hopper. Get this, in San Jose, California, there's 370,241 owner-occupied houses. Of those, 195,822 are worth north of $1 million. That's 52%. And if you've ever seen San Jose, it's not the greatest place in the world. It's unsustainable. In San Francisco, 40% of homes are valued over $1 million, and in Los Angeles, 18% 18.5% of homes are worth north of $1 million. Do the math on that. If we equity share, this is the next solution to fix our already run-amok home values that are too high. The only thing that's going to occur is all of the houses in all of those markets are going to be worth north of $1 million. Why? Because 20% of us think that equity share is a good idea, and that 20% are going to make 100% of homes unaffordable for those of us that don't want to give up 70% plus of our equity. Hey guys, Lender Price and Broker Plus are together. Now, Broker Plus is going to be your point of sale, your LOS, your CRM, and so much more. And with Lender Price in there, you'll find pricing that you didn't even know existed. Check it out. It's going to be much more cost effective than what you're currently using. All cloud-based, totally cool, and built for you, the broker. Click this banner right over there and check it out. And finally, because we have to end this on a good note, somebody's having a great year right now. As a lender or a real estate agent, you're totally tearing it up. Reach out to us and let us know what you're doing that makes you stand out. Have a good day.
CC on the track, boy.